Welcome back, everybody. Let's dive into another Bitcoin update today. I do want to go over a little bit of higher time frame TA as we have put in this low overnight, as well as go over the trade that I entered in yesterday on the short. And let's just take a look at a few things of where we are now, what's happened, what's happening on the chart with structure, finally revisiting this demand range that we've been waiting for a long time now, as well as looking at some order flow and what are we seeing in order flow as we're coming down to these levels. So first, let's go over the trade that I entered in yesterday. And this was in the Discord here. This was a trade that was a back test off of the value area low using the TPO market profiles. And this is a trade that you can see that I enter in a lot. I use session volume profiles as well as these TPO profiles. So in context, we saw a big impulse out of fair value. So that is giving us a lot of information on its own. And at what time? Because time is important as well. And we could see that this big impulse happened right after New York Open, right in the AM cash session of New York. So it happened at a very good time to give us further context. Furthermore, we can see that we had just hit the point of control and rejected from that area. So this is kind of what I'm thinking inside of my mind in real time. What am I using for context for moves? I don't just use SMC. I love SMC. It's a big foundational piece to everything. But I also love volume, and I trade a lot with volume profiles. So I saw this nice rejection wick at the point of control, a big impulse and rejection away outside of fair value. And what happened next was a simple back test of the value area low. And again, this is something you see me do if you're in the Discord all the time. I take these trades left and right. So what is this telling me contextually? It's telling me that price tried to pull back into fair value, but it's spending time outside of fair value. And what does that mean? When you start to spend time outside of fair value, it's giving us the context that people are accepting lower prices. So this is acceptance at a lower price below current developing fair value. So that was the context of that trade. So we can see this again on the chart here. And we see this was right around the area that I entered in. And if we go down, you can also see that there was a very internal SFP. It's not really clear on the candlestick charts because you would have to go down to lower time frames that you could possibly say aren't really trustworthy, especially without context. They're definitely not, right? You don't want to be taking this type of trade without any context here, because this type of internal SFP, especially at the lows, it's not a plus location for short. It's not an A plus setup without very, very specific context. However, I told you the context and I took the trade. Now let's go into Bookmap. And what you can see here is microstructure. So when you start to get really familiar with microstructure, you can start to build on further context, further levels, using microstructure in all sorts of ways. But what do we see here? So this was at that same time. And we can see that we had that internal SFP of this structure here. And we had the back test of that value area low, but also this VWAP deviation band. And what is the true context here within order flow? So if we zoom out a little bit, and I was telling you the impulse was after New York Open, and it was already coming down, and we can see that here. And we had already back tested, and rather we tried to reclaim New York VWAP, which is the pink line here. We had already rejected from VWAP on the open, lost VWAP as well as New York VWAP, tried to reclaim it here, but again, we just couldn't find acceptance above this VWAP for the buyers to regain any kind of control. You see it here again. Try to reclaim this black dotted or dashed line, which is the bottom VWAP deviation line. And this blue line here is the point of control of the session volume profile. So we see the point of control snap to price. This is also giving us heavier context. Again, I use session volume profiles a lot in my trading. I sometimes use them more than I use structure itself. I don't ignore structure, but there's a deeper layer to what I'm looking at for context. So as we can see, and just zooming out a little bit more, just to see, of course, I mean, it's not hard to see that we are in a heavy downtrend. So trying to find a way to get in with the trend is a very obvious move, right? It's a very high probability move, especially after you saw what happened in New York Open. You see this nice impulse away from the New York Open, and then you see us trying to get and reclaim that New York VWAP, the pink line. But this is a redistribution on a microstructure level. And then you can keep watching it do the same exact thing. Even this section right here is a tiny, tiny, tiny redistribution. Coming down, you accumulate back up just to sell off again. And it does this over and over and over again. Once you understand that price moves in ranges and impulses or balances into imbalances, you can start to see the charts contextually in a lot different way. So I was looking at this point after these redistributions in this pattern of just a simple downtrend is, can we even flip any kind of structure here? We did see this kind of flip down here, but you want to see follow through strength. Again, you have to take microstructure as microstructure. So it only holds a certain weight in the context of everything that we're looking at, okay? So once I saw this, and I was looking at a few other things on Market Monkey as well to actually get in the position, but you could have gotten in anywhere around this area. I don't care if you wanted to take the wick entry here, or if you would have just saw this break down from this area, or you got in on this back test of this simple range right here. So again, microstructure, still structure. You just have to weight it correctly in the prioritization of what's most important to least important. So that was why I took the trade. And that was the context behind the trade. And just as a lot of my trades, I do have a certain type of trade management that I use for certain trades. And this was one of the ones that I was quite confident about, right? And why was I so confident about it? Well, I mean, obviously, the state of the market is telling us to go short, and that's not really hard to read. Hopefully, everyone can understand that. But let's zoom out on order flow a little bit. Let's build real context with order flow. So take a look at the volume of the negative delta bubbles. Compare them to what we see and what people get offside. You see 6,000 Bitcoin here, 2,000, 1,200, 620, 3,200 almost, 5,300 Bitcoin, another 5,300 Bitcoin, almost 7,000 Bitcoin here. I mean, we have thousands of Bitcoin, not to mention the 8,300 here and that almost 10,000 here. And I was showing this yesterday in the Discord of how much was selling off and just the sheer volume of it all. And you can kind of group it together a little bit more to get a better idea. Just waiting for it to load and catch up. So you can see 12,000, 5,500, 7,700, 7,500. This is a lot of money in Bitcoin. And again, that volume number is not the dollar amount. It is the actual coin amount. So that is saying 12,472 Bitcoin. So that was the context of basically trying to get in with the trend, and I do mean a very, very strong trend. But let's build even more context. So let's remove the profiles and let's go back to the daily time frame. Just as I was talking about in yesterday's video, and I know I've harped on this plenty, so I'm not going to go over it, but we did have that daily Model 1 distribution, and obviously a high time frame distribution is usually going to lead to a very large move, and I was looking for this to get mitigated here, so I wanted a deeper mitigation. So as we were coming down, I was wanting to see a few things happen. Actually, we won't even go into that. So what do I use here? What do I use to try to predict in a way with high probability of where we're heading to with such large moves? At this point here, I was pulling out my range, and I was pulling it from the high to the low. We deviated out, came back into the range. So we expand our range to include that new bit of price action. And what do we see here in the liquidity pocket? We see that distribution happen and price comes back into the range. So we're going to also include that. And now this is the range I'm looking at. And if you're in the Discord, I talked a lot about these two liquidity pockets that I have and using in this tool. And I've used them and back tested and forward tested them for probably about 3 or 4 years at this point now, maybe even almost 5. And these have very good hit rates. So as we were right here I was just expecting to sweep more liquidity and head down to this area here. I have made this position and have taken this position many, many times over the years to know how that works and to know the confidence level that I have with that kind of position. If we pull our fib from the low to the high, I was also thinking that, hey, maybe this area here, we have that liquidity pocket as well as our golden pocket down just a little bit further. So they're overlapping here. So I was wanting to see that really get hit. We did not hit the golden pocket. I was also looking for this point of control that also had confluence with that entire area. So that was my target, was the golden pocket and the point of control. However, I was trailing my stop loss down on that trade and I got stopped in profit. Again, like I was saying, I usually choke out my trades. But this one I was pretty confident in. So I let this one ride a little bit more than I usually would. And I didn't take profits until we were reaching closer and closer to that zone, that liquidity pocket zone. And once we hit that liquidity pocket zone, I did take a lot of profits off the table and trailed my stop loss down very aggressively. And we did find a pretty nice bounce here. And I stop loss got taken out in profit. So that brings us to today. So again, we're using this context to build what's going on now. We see a nice V-shaped reversal down here, right out of the liquidity pocket, which again, very confident for me that I know that that usually ends up in a nice reversal, at least back to the range or the equilibrium of the previous range. And like I was saying yesterday, this very well could do something like creating a higher time frame model 2 where we come back up, revisit this range and go down. However, it would be better if we came up, SFP'd this high, made that high, and so you have tap 1, tap 2, and tap 3 here for that larger expanded model 2. And that would be the case for the bearish scenario. And as well as I went over yesterday in the stream, we still have a full month that we could range in this area and then close above this monthly swing low. And actually, this just ends up being a wick here. So let me make that a little cleaner. So you close above that low, and this just becomes a wick here. And then you can target higher. Now, again, that doesn't automatically mean that I'm going to target the absolute highs. I would want to see this high taken first and see what happens here. Because we're also what? Looking for that other scenario where we come up, SFP this high, and then go back down, and this being that third tap for the model 2. So we just have to wait to see how price interacts and how buyers and sellers accept or reject price at these levels. So this is turning into a little bit longer video than I expected, so I'm going to end it here. But those were the scenarios, ideas, and why I took the trade yesterday. What I was looking at as far as context on market structure, levels, volume profiles, and in order flow. So that will be it for me today, and I will catch y'all in the Discord.